Hey guys, welcome to the BBQ Investor. We got a little bit of things to cover today. One of them is kind of going to do a format change here. Main reason is before I've been kind of reading off of scripts and different things like that. I just really wasn't that comfortable with it. So I'm just going to kind of be me and we're going to make a few changes. We're still going to be doing the 4-lane challenge, absolutely, because I honestly want to know what's going to happen on that challenge myself. That's why I created it, and that's why I think it might be interesting for some of you guys out there as well. So some of the things we are changing, I'm not using Claude anymore. Anthropic just got really weird for me. I would give Claude an order, and it was like, a prompt, and then it would just, I think you're going to find the content a lot better. Main reason I'm changing is just because I just want to be me. So I'm going to cover like the 4 lanes this week. I'll be honest with you, there wasn't a whole lot went on. There was some trading that went on, and we are still using Sonnet in our account because Sonnet's already there. It's cost effective, and it's simpler than trying to change everything. He made some pretty good moves this week. It's doing good. The broad market index, honestly, is probably still a little bit above it. And it just makes you wonder. And that's why it's there. It's the check. We're going to find out if, you can put an AI in there and give it all this material, but is it going to outperform just like buying and holding 3 or 4 broad market indexes and just let them go? And that's what we're going to find out. So the automated strategies, my strategies have not fired yet. Now, they fired on a couple of smaller coins, and I'll tell you them accordingly. I mean, all the smaller coins are sized really small. And they're there because I have to go with a higher time frame. I have to go like a 1-day time frame on those just to have enough data to have an idea if they're going to work or not. So that's why they're firing right now, where the 3 and 4-day ones are not firing yet. And that's okay. But we're going to find out exactly how they're going to do. But the biggest thing is you've got to let them go. If you trust it, if you researched it, you back tested it, that first one was a losing trade. You know what? We're not in the bull cycle yet. When the bull cycle starts, then the next 8 trades may be all positive. So if you're going to start it, your biggest enemy is still you, because if you don't see it winning right off the bat, and you pull the plug on it, then you didn't really give it a chance. So we're going to give them a chance, and that's the 3 that have fired so far. So I'm just kind of letting you know what is done there. The rest of it, we'll see how it plays out. But yeah, I'm really enjoying the open AI right now. We're gonna have like me do the openings here, and then I'm gonna let chat reply to it. And then I'm letting him kind of handle some of the narration from there on. He's going to like search through the news, and like if there's a Fed report coming out or if there's earnings coming out, he can kind of cover some of that almost like a reporter for us, because he can pull from like everywhere, from like X, from anywhere. So we're going to do that. We're also going to we're going to create a Python code where if I'm in the fields and I'm busy and something happens that I need to know about, I'll get a prompt. And if I need to, we'll go live in a combine. We're going to have different things. One of them will be like if it's a pit probe going off, guess what? Pit probe goes off when you're barbecuing. You better go check it. So if that happens, we're going to do it. And I think that'll be a little bit of fun too, because you'll get like my reaction as I'm maybe sitting in a combine cutting beans. Who knows? I think we're going to have more material that way. We're still going to do the 4-lane. We've got this other channel called Prove It. And we're going to have a lot of fun with that one. There's going to be some memes in it. It's some humor. They're going to be fast paced, but they're going to be some good content. We're going to cover like different indicators, like maybe repainting, just different things that a guy that's starting in investing, or even if you're in it, it's just going to be fun. It's going to be fun. It's going to be entertaining. You're going to learn something from every episode. And it kind of gives us a medium where we can really kind of try to have a little bit more humor with it, not take ourselves quite as serious. Not that we're going to take ourselves serious here. Now that I'm running the show here, it's not going to be as serious. We're going to have fun. You're going to hear my perspective on things, and probably going to be wrong about a lot of them. That's what Chad will be there to kind of set me straight. And I may set him straight. Who knows? We'll have fun. Part of this, I went out to eat last night with one of my good friends from barbecue. And he was like, he said, I watched a couple of your shows. And he said, man, I can tell you're really nervous. And I was like, I was really nervous. I was trying to read a script. I'm not a scripted guy. And it was like, I don't know, I was trying to have this persona. And anybody that knows me, especially if you're in the barbecue world, I am the least caring guy about being cool that there is out there. I mean, that's just the way it is. Maybe when I was younger, I cared about being cool. I don't care about being cool anymore, but I was trying to be cool for you guys. And we're not going to do that. We're just going to have fun. I'm just going to be me. If it's awkward, it's awkward. If I'm a goofball, I'm a goofball. Who cares? It's not too serious. I'm not going to take life too serious. I'm going to try to give you guys some good content. The reason I started this in the beginning was because I wanted a place to have honest numbers, because there's so many things out there. Man, I got into this. When I go down a rabbit hole, guys, I go down a rabbit hole. About 10 years ago, I went down a rabbit hole for a competition barbecue. And if you don't know me, our name of our team is Local Yokos Barbecue. And we competed about 10 years now. And in that time, we've been lucky. We won the KCBS World Championship Open in 2024. We've won 2 category world championships. But we went down that rabbit hole. And it's one of those things, if I get decided that I'm going to do something, man, I just can't let it go. I'm like a dog on a bone. And it just started with this investing thing probably about a year and a half ago. And then I wanted to learn how the AI, and I wanted to learn about building my own strategies. And I tried to watch all this YouTube content, and there's so much out there. And it's like, what do you believe and what don't you believe? And some of it that I believed, once I actually started building, I was like, man, that's not real. That guy's not real. He's not scalp trading with a profit factor of 1.4 and making a lot of money. The way he's making money is trying to get me to buy his channel or buy his, program. And I just want someplace where I'm sure there's other guys that are out there like me that are watching this stuff, and you're like, what's real and what's not? So we're going to do some of the things that I think are interesting, and we're going to do them right in front of you. And if they fail, they fail. Some of my swing trading, I've been doing some swing trading. I've gotten a lot better at it, guys. Just different things like the Robinhood. I started accumulating it again when it got down to about in the 70s. And then I sold it $100. And I decided right then, I was like, I think I'll get back in it because I don't think the bottom is in yet on crypto. And for whatever reason, Hood does follow crypto some. So I decided when it got down below $90, I'd accumulate again. So I've started again. I plan on holding it through the cycle because I think, in my opinion, strictly my opinion, I think Robinhood's got a chance to get maybe $200 plus during the next cycle. That means between now and the end of 2029. Coin, that's another thing I'll probably invest in. Coin, I won't be a long-term holder, but I'll buy some of it for the cycle because I think it could go back up to $400 or $500 a share. That's about $160 now. So yeah, I'll take 3x over the next 4 years. Yeah, not a problem. So anyway, this is the new format. We're going to have fun. We are starting a couple other things. I did start like an options paper trading. I started a crypto paper trading. And I'm starting to do research on pennies because I want to see exactly what AI can help us with. To me, I'm not research it first before we even paper trade it because I think I said that in my last episode. It's like before it gets a chance to even earn paper trading, it's going to have to earn just back testing. I mean, we're going to have to do some research on it because it's just too volatile. So we're not just going to be reckless with any of this stuff. Everything I'm doing is pretty small counts, guys. It's just a way for us to be able to discover if it works or if it doesn't. So I hope you like this new format. And let's just see how it goes. Leave a comment. Smash the subscribe. Let's see how this goes. Hope you all enjoy it. And let's get on with it.
Brad, first things first, your barbecue friend was right. You were not bad on camera. You were trying to host somebody else's show. This version finally sounds like you. And retiring from trying to look cool at 59 may be the strongest trade you make all year. More importantly, the new format fits the mission. You bring the lived experience, the portfolio decisions, and the willingness to show the ugly parts. My job is to check the receipts, challenge the story when the evidence disagrees, and explain what matters next. So, welcome to the first Chat Pit Report. On the strategy question, I agree with Brad's larger point. A losing trade is not permission to rewrite a researched system, but patience has conditions. The live implementation must follow the tested rules. Position sizing must remain intact, and the broker, not the journal, gets the final word on whether a trade happened. A 15.22% losing VVV trade does not prove the strategy is bad. It proves the strategy can produce a 15.22% losing trade. That is exactly the kind of risk the sizing has to survive. Here are the latest verified percentages. Lane 1, the broad market control, is up 1.49% from inception and remains the leader. Boring is undefeated until something clever proves otherwise. Lane 2, the cycle aware sleeve, made no new dollar cost average purchase. That is not a forecast. The written trigger simply did not arrive. Lane 3, the core automated machine, still has no buy signal in Bitcoin, Ether, Solana, or SUI. Inactivity is a decision when the rules say wait. Lane 4, the live agent, is now approximately positive 0.39% from inception. The control still leads, but the experiment is young. A late Lane 4 update. After Brad recorded his opening, Sonnet trimmed roughly 1/3 of the remaining energy position. Its reason was weakening momentum. 3 consecutive sessions of a deteriorating MACD histogram. It kept partial exposure because the pre-declared hard exit, a close below the 50-day average, had not fired. Broker position snapshots corroborate the reduction, although the current export did not retain the exact fill receipt. So today we report the action. Next week we judge the decision. The separate live regime scorecard now has 5 completed trades, 4 winners and 1 loser. VVV gained 17.68%, Hype gained 4.59%, Pengu gained 4.33%, Tau gained 1.11%. The second VVV trade lost 15.22%. That is an 80% win rate, a median trade of positive 4.33%, and an average trade of positive 2.50%. Those are gross price returns before fees, not account returns, and not 5% percentages we are going to stack together like financial Jenga. 5 trades are encouraging. 5 trades are not proof. The part worth watching is the sequence. The smaller assets are using faster time frames so they can trigger while the 3 and 4 day systems remain quiet. If the longer time frame Bitcoin, Ether, Solana, and SUI systems begin turning together, that may be broader regime confirmation, not a prediction of the exact bottom. We are looking for clues: market health stabilizing, price regimes confirming, and eventually public attention waking up. None gets to declare a bull market alone. In the paper laboratory, the options account still has no verified open position. The repaired sizing rule now has to prove it can create an executable order instead of a beautiful journal entry about a contract the broker never bought. The crypto paper account still holds Uniswap. At the latest audit snapshot, it was down roughly 0.42% from entry. That is paper trading, clearly labeled. Penny stocks remain research only. The scanner narrowed 271 raw movers to 200 candidates, but liquidity, spreads, float, halts, catalysts, and dilutions still have to be tested. The AI has to earn the right to lose imaginary money before it ever gets near real money. Now the market story that matters this week. The United States lost 23,000 payroll jobs in July, and May and June were revised down by a combined 103,000. The unemployment rate slipped to 4.1%, but part of that improvement came from people leaving the labor force. Markets may hear weak jobs and immediately whisper easier policy. Not so fast. July CPI and real earnings arrive Wednesday, with producer prices Thursday. Weak employment plus cooler inflation could relieve pressure. Weak employment plus hot inflation is the uncomfortable combination. Slower growth with sticky prices. That matters to the broad market control, rate-sensitive fintech, growth stocks, and crypto liquidity. One report is a clue. This week gives us several. Robinhood's own numbers make this experiment more relevant. Agentic trading launched in late May, and by the end of the second quarter, nearly 100,000 accounts had joined, representing more than $100 million in assets. That proves there is demand. It does not prove the agents are profitable, disciplined, or even reading the right file. A lot of people have given an AI the keys. The interesting question is how many also gave it a map. Lane 4 is our attempt to document the map. Tools, rules, limited freedom, broker evidence, and an audit trail when the explanation sounds smarter than the execution. On crypto regulation, comprehensive market structure legislation still matters, but it is inaccurate to say clarity returned to zero while Congress works. A joint SEC and CFTC interpretation became effective March 23rd. It describes crypto asset categories and explains how a non-security crypto asset can become subject to or cease to be subject to an investment contract. That is not the same as a complete law from Congress. It is a regulatory bridge. For Coinbase, Robinhood, Kraken, and the assets Brad follows, the difference matters. Unfinished is not the same thing as non-existent. One new research project is going on to the Command Center roadmap, a crypto attention index. We will combine market health, longer time frame regime confirmation, and public attention, search interest, social discussion, video interest, app activity, and trading participation. The useful signal may be acceleration, not popularity. Dormant, stirring, returning, crowded, euphoric. Near a bottom, nobody cares while conditions quietly improve. Near a top, everybody has a target and somebody's barber has discovered leverage. No predictions, just clues, and a record we can test later. So the scoreboard says the boring control still leads. The live agent made a defensible trim with one evidence gap we are not hiding. The regime strategies have an encouraging but tiny live sample, and the macro calendar is about to test whether weak jobs bring relief or a more complicated problem. That is the first chat pit report. Brad, I agree that you should stop performing and be yourself. I do not promise to agree with everything you say after that. Back to you.
Great job with the first chat pit report. I enjoyed that. Guys, we're going to try to find some more things. We're going to scour things like Fox Business, CNBC, X. We're going to find anything that might be pertinent to what we're doing, like with our crypto or with our swing trading or any kind of asset like that. Just like him talking about the things coming up later this week, CPI data. Anything that may affect the Fed's decision whether or not to raise high rates or to keep them the same or lower them, that's going to affect the market. So we're still kind of waiting on the crypto. We're like I said, we're trying to add a few more things to try to help us figure out when the bottom might be in. I still tend to think probably October, but that's just a guess. And that's just a guess by watching a lot of other influencers out there. So I'm definitely not the expert, but I expect it to go lower. Don't know if it'll be like a black swan event or if it'll just kind of happen, man. I'm telling you, it seems like August and September on the midterm year is just not friendly to crypto. That's usually when it starts to really start going down and finding its bottom. So we'll see. If it doesn't, you know what? We've already got a little bit of it. We've DCA'd some around 58.5, I think it was. That's fine. We'll just ride it. But if it goes down more, I'm going to buy more. So, hey, hope you like this new format. We're going to get better at it. It's going to be more fun. It's not going to be scripted. We're just going to have fun. I'm Brad, and I'm the BBQ Investor.